Hey everyone, welcome to another week of #AskRobCo. Hope you're all well, hope you've had a good week, hope you're enjoying the Indian summer and you're not too distressed or stressed with the fuel crisis that's hitting the country. James, hope you're well?
Yeah, really good, thanks Rob, how are you?
Yeah, really good, thank you. What have you got for us this week and what data is out there for the audience?
Yeah, thank you Rob. So this week, the data, it's been another positive week actually, which is built on that of last week. In terms of new instructions this week, we're at 380 weekly instructions, which is the highest new weekly instructions we've seen since earlier this year in May. So it obviously indicates some of the stock is getting back to the market with new instructions, which will obviously facilitate sales in the market as we move into quarter four. In terms of the weekly sales figures, again, very positive, 165 for this week, which is the highest weekly sales figure since the end of June, which obviously coincided with the main stamp duty holiday ending. So again, some more positivity there. But again, Rob, I think these higher weekly sales we're seeing are obviously connected with the increased weekly new instructions we've got, and it's just facilitating more activity in the market.
Yeah, I think that what we're seeing at the moment is the seasonal activity is normalising and behaving the way that we would expect. And we would have been talking the last 4, 5, 6 weeks since the beginning of August, how we expected the volume to ramp up, the sales to ramp up as we hit the end of September. We're now in the last week of September, and as James just mentioned, we've got the 4th highest level of instructions for the whole year, which is tremendously positive. And the sales figures outside of the stamp duty ending and that flood of sales, we've seen the highest amount of sales since March. So I think we're lining up nicely for a good end of the year, as is seasonal. So quarter for October and November will be good months. And I think the seasonal dip, and everyone that's got the data and the numbers will see that prime and super prime dipped in August and dropped off what has been a very strong year because, as we were saying, that marketplace was on holiday, was overseas, like is normal, took an extended leave, maybe longer than normal because of the historic COVID timelines, and that market will strengthen through October and November, and I'm very confident that the numbers will return, but the data tells us it was the least performing month of the year. Seasonal adjustments for prime, super prime, and let's watch that space and see it return in October, November.
Yeah, and Rob, as we were saying, in those months after the stamp duty holiday ending at the end of June, whilst we did have some subdued levels of weekly instructions in the months of July and the immediate aftermath, and also spilling into August, we were commentating that we were saying in the month of September that we expected some stabilisation in the market and it to get back on track, which is now coming to fruition, albeit towards the end of the month of September. It's moving into sort of positive shape as we go into quarter four.
I think what's super interesting, I've been travelling, meeting up with our banks and lending clients throughout Europe, and the trends that we're seeing here in the UK are very much the trends that are being seen in Spain, in Germany, in Portugal. The markets are very much repeating themselves, and that's really interesting, especially where there's maybe a wealth position, Mr. and Mrs. ultra high net worth, really trading well throughout Europe. So I like that the trends and the patterns that we're seeing here, and this is what I've been sharing with the banks and the lenders throughout Europe, is that those patterns are being repeated across the world, but obviously we work in predominantly Europe, and I like that about the sector and the industry, about how it's becoming more unified in behavioural patterns of transaction across all markets.
Yeah, and obviously, as we move into the autumn now, we've got the COVID booster jabs being rolled out for those which are eligible for that, which hopefully will bring some more sort of comfort in terms of those which require it here in the UK. But again, very topical this week, Robert, as we mentioned, the fuel crisis, which is one that's impacted nearly everyone in the country in some form, whether it be on their own personal life or be able to sort of source certain goods or have access to certain services. Obviously, those with electric vehicles have been able to sort of more so go about their sort of everyday lives in terms of transport, but that's still a market, still getting off the ground in terms of electric vehicles. The crisis differs slightly from that of 20 years ago, whereby previously the protester groups blockaded various depots, creating the nationwide fuel shortage, which it is now the case that we're being reported that the UK has enough fuel in terms of its stock supplies, but without the logistical means to distribute this to the necessary filling stations, whereby motorists are panic buying, which is exacerbating the issue of that short-term supply of fuel. I came back, I drove back to London yesterday from a wedding actually, and on the motorway, on all the service stations, it was HGV fuel only. A lot of motorists not having access to fuel on the motorways travelling down south. So it's something that is we're hopefully moving through the worst of it now.
Yeah, I mean, what I've been informed of this week is that some inspections haven't been taking place because valuers haven't had the fuel or been able to get the fuel to put into their cars. So people doing volume valuations have had to cancel or delay inspections, and I imagine that's happened in a lot of other industries as well. So it's an interesting one.
Yeah, it's literally sort of all sort of facets of the service industry, whichever sector you're in. It's often the supply of goods, or if it's not the supply of goods, it's obviously your capitalists or your everyday workers who may not be able to travel to work unless they're very local. We do know that the government has taken the decision to grant 5,000 temporary UK visas exclusively to foreign lorry drivers, which hopefully will create some easing of that logistical supply chain shortage of drivers. Furthermore, I wanted to comment in terms of the fuel prices. They have been going up this week, possible with other sort of knock-on effects as a result of this, and the lack of logistical distribution, coupled with the brewing energy crisis in the UK, which is being reported. I mean, hoping that this doesn't have a dramatic impact on inflation, but it really feels like a lot of things are moving against us in terms of that rising inflation here in the UK, which currently we're at 3% as of last week.
Yeah, I mean, we've discussed this in detail, and we're very much aware that the inflationary climate that we're in currently is a concern, and how that will impact both the wider economy and the property market and interest rates moving forward. We will have to wait and see, but obviously it is a concern.
Yeah, and obviously end of September, end of this month, the last day of furlough will be the 30th of September, whereby the scheme will be completely withdrawn from the 1st of October. The most recent figures I've got in front of me, 1.6 million people were on furlough at the end of July earlier this year, which is the lowest number since the start of the pandemic. But if we think if there's going to be any overnight change to those 1.6 million people, whether they'll be going back to their everyday jobs or whether they will unfortunately being released or whether they have other jobs lined up to go to, that will be a bit of a wait and see, and how that impacts on the unemployment rates in the UK.
Brilliant. And then wider property news?
Wider property news, we've got the discount shopping chain Aldi has pledged £1.3 billion to Britain in the creation of 2,000 immediate new jobs. It comes in the form of their logistics infrastructure, which includes a new distribution centre, which they're targeting to install in the centre of England. That's in a bid to accelerate their growth and also market share. Aldi have been building momentum in the last sort of 10 years here in the UK, but during the pandemic, with their lack of online presence in the last 12 to 18 months, have actually lost some market share. So they're looking to recoup that and continue with their expansion plans. It's been interesting with supermarkets, with so many more people buying more food than ever from the supermarkets, and people not going out for sort of cafes to coffee shops, and for more formal dinners, for gatherings. People, a lot of people's birthdays in the last 18 months and celebratory events. You haven't been able to go to a restaurant to meet family and friends. So a lot of supermarkets, I think, looking to take advantage of the more people they're seeing sort of through the doors and their online presence. We note that Sainsbury's have relaunched Habitat. They're stocking some of the Habitat's products in their stores. This comes after Habitat actually closed their flagship store on Tottenham Court Road. We know that John Lewis has partnered with Waitrose to sell some of their items of homeware and clothing. Interesting one from John Lewis. They said that their current turnover, £4.8 billion per year. By 2025, they're predicting that 2/3 of their turnover is going to be from online receipts rather than anything in store. And is that how you think the market's going, Rob? We're going to see more online than ever purchases, which will, it's going to further strain some of the distributions and final mile distributions.
Yeah, I mean, without question, that's the future of retail, and that's the future of logistics and distribution. That is only going to strengthen everything that we're seeing, hearing within the market. It's all about last mile, first mile, mid-mile distribution, and that market is going to get more sophisticated. There's going to be more economies being built into it, and I'm super excited for distribution, logistics and retail to move forward in the 2021 and beyond on the back of what's happened with COVID.
Yeah, okay. I just wanted to cover it, just go back to something briefly. We've got a record number of job vacancies here in the UK. I noticed that a few months ago we passed the 1 million mark. We're now up to about 1.5 million job vacancies in the UK. I've got a bit of data on what the split is. HGV drivers is at the top of that list. 100,000 of those are required, whilst 80,000 nurse vacancies are required. If you look at unemployment currently, we're at 4.7%. So hopefully, some of those record number of job vacancies will help to offset any growing unemployment from the end of the furlough scheme.
So the challenge there is obviously skill shortages and changing employment areas of work. And so we've got the people that were in furlough schemes that were predominantly hospitality and retail and leisure. So it's whether there's a skills shortage for the areas that now require the jobs. And I think that is going to be the challenge, and it's going to take time. It's going to be a transition. The workforce is moving from one area to another area, and to fill that gap, that
training lead time really being the stumbling block there. Also, we've got, in terms of the end of this month, 30th September, the stamp duty holiday completely closes, whereby currently buyers can save up to £2,000. Do you think that'll have any impact on the market, Rob?
I don't think so. I think that the approach by the government has been to softly see out those incentives, and that's why they separated it in different price brackets, and I think it will just peter out and the market will continue.
Yeah, and just a lot of people are almost sort of buying into a new way of life, whereby they're sort of spending extra on a property, over bidding over the asking price, and that's been their main focus rather than necessarily getting real sort of a bargain or value for money.
Absolutely, I think that is the question. It's a life-changing lifestyle, different mindset now, and that's what we're moving into, and that's what the current generation of buyer is thinking about. Anything else for this week?
That's it. No, just congratulations to the USA, obviously winning the Ryder Cup earlier this week.
Yeah, a lot of golfers out there. The US, were absolutely superb in their display. For all of you golf lovers, Europe took a real beating, record score, and the display by the US was another level. And we'll have to see what the Europeans can do in 2023 when it comes back to Europe in Rome. Let's see if they can overturn that, I would say, heavy defeat and fight back. But the Americans are looking great, and it was a wonderful display of high-level golf from them. Hope everyone is enjoying our content. We're really super grateful for the support that we're getting within the community. Really happy that I've been meeting up with lots of you. If you haven't met up with us, please book in your meeting. We do want to see you face to face. It is great to actually get to see you in the flesh. That's what relationships and building relationships is all about. So really appreciate all the ones that have reached out and we've booked in times, and really hope that as this year sees out, hope to get to see you all, and I'll carry on travelling, seeing all the banks throughout Europe and as far as I can get to make sure that you get all of that first-hand information and data and detail. And we will continue on this platform through YouTube, the podcast, and all the other socials to keep on serving you every week with what's happening live within property finance and the wider economy. So super grateful. Thank you for your amazing support, and we will see you all next week. And thanks, James.
Thanks very much, everyone.